This is Small Business Big World, our weekly podcast prepared by the team at Paper Trails. Owning and running a small business is hard. Each week, we'll dive into the challenges, headaches, trends, fun, and excitement of running a small business. After all, small businesses are the heartbeat of America, and our team is here to keep them beating. All right. Hello, everybody, and welcome to Small Business Big World, the weekly podcast where we talk about all things small business and getting your life in order and having employees. And today we're going to talk about insurance, which is one of the most aggravating conversations we have with most of our clients. And today I have Jonathan Johnson with Kasprzak Insurance with me. John, thanks for joining us.
Oh, a pleasure to be here, yeah.
So don't forget, before we get going, to get some housekeeping out of the way, please like us on Facebook, Instagram, YouTube, all those fun things, Small Business Big World. Be sure to subscribe in your favorite podcast episode. Always share. And feel free to reach out if you ever have any questions. We're always happy to take those. So John, you are an illustrious property and casualty insurance agent.
That's correct.
All right. So talk to me. There's many different types of insurance. P&C, property and casualty, life and health. What else? What other kinds of insurance agents are there? There seems to be a lot of different types of insurance agents.
Yeah, definitely a lot of different insurance agents. I think a lot of them are general insurance agents where they maybe not specialize in any one thing. They may do health and life or property and casualty, professional liability as well. But I myself focus on the professional liability along with the property and casualty side and don't do the life and health.
Right. So liability for your business, for your employees, your equipment, those kind of things, right?
Yeah, definitely.
So when someone sues you and they say, just file a claim with your insurance company, that's your kind of thing, right?
That's my kind of thing.
All right.
Yeah, that's
or you
where
crash
I get
the car.
phone call.
You crash the car,
Yes.
flood the car out in the ocean like we heard about last weekend with the flooding. And
yeah, that is something we never thought we'd hear, but it did happen. Some of the stuff we can't make up, but that's kind of why our philosophy is writing insurance for when it happens, because we never think it's going to happen, and especially the client's always like, well, this isn't really, it's probably not going to happen. And of course, we as agents sit back and do the knock on wood because we've heard that before, and it's nice to write coverage that will provide them something in the event it does occur. So
awesome. So new small business comes to you and says, hey, I'm going to open my doors. We're going to start offering XYZ service or selling this.
Sure.
What's the process look like when a new business comes to you and says, hey, I need insurance? What questions are you asking? What information do you need? What's running through your mind when you're having those conversations? Certainly every industry and business is a little different, but you must have a process that you kind of go through.
Yeah, we do. I mean, it's always important, first of all, to get to know the person that you're talking to, where their experience is, what did they do prior, because the underwriter is going to ask us the same questions. So we try to do some front-end underwriting and get a feel for, experience owning a business before or experience managing businesses like what they're going to be opening. And then in addition to that, we kind of look at, what are the things that they're going to be buying? What's the business going to own? What's the business going to provide for a service? Because we got to look at the property side of it, figure out what assets to protect, and then obviously look at the service side of it to figure out what potentially are they going to do that would maybe bring a bodily injury or property claim to the table.
Interesting. So lots of variables there. So you talk about underwriting, right? So you're going to take an application from a potential client. You're going to have to go back to the different carriers, right? So you're kind of the middleman.
Yeah,
right?
An independent agent. So I'm the fortunate thing with me is I'm able to go to multiple markets. I'm not a direct writer, so I don't just do business with one carrier, which I find
like a Geico, right? If I go right to Geico, I go to Progressive. That's who I'm dealing with.
Or State Farm, or Allstate, or so it's nice to be able to, especially in the market we're in now, where things are a little tougher with a lot of the companies. We want to be able to go out to the different carriers because some of them are changing their appetite, and some like certain risks, and some used to like the risks, but then the losses went up and now they don't. So it's a game.
It sounds like fun.
Yes,
it's a game, right? Okay.
Yeah.
All right. So when you come to when you come and present a policy, right? We're going to present workers' compensation insurance, right?
Yep.
So to Joey the mechanic.
Yep.
So what information do you need from Joey And, and then how does the underwriter say, okay, this is the risk, this is the price, right? What's that process look like? I mean, I'm sure they've got actuarial tables that would blow our minds, right?
Sure, yeah. Oh no, definitely.
But what information do you need from the client in order to figure out the pricing and so forth?
Yeah, we really kind of break it down, try to keep it as easy as possible, and start it out with, is it going to be incorporated or is it going to be a LLC? Because if you're incorporated by state law, you're automatically included in the workers' comp insurance as an owner. But you also can opt out of it with a waiver that we assist you with and get it off to the state. If you're an LLC, you're automatically excluded from coverage unless you choose to cover yourself, which we have that conversation too. Because if you're in a business where if you're sitting behind a desk all day, maybe some people are going to waive and not cover themselves as an owner for workers' comp. But if you're out on the street or working on ladders or different things and you're a part of that business, you probably should consider covering yourself, because if you were out for a few months, it would be a big
big loss to the business, right?
Big loss to the business. So we start with that. Then we go on to, do you have employees? How many employees do you have? What are their job responsibilities? Because some may be sitting behind desks doing clerical type things. Some may be out as carpenters or landscapers or snow plowing.
Sounds expensive, all of those things you just mentioned.
Yeah, I guess my brain tends to go that direction. I don't know.
Yeah, I mean, those, as we're talking, I know those are the expensive codes, right? Because workers' comp has workers' comp codes, right, based on your job.
Right.
So, all those things you just mentioned are the expensive codes. The 8810, which is my code personally, right? That's office clerical work. That's about as cheap as it gets.
It is.
And, we certainly have a lot of clients, we have a lot of mutual clients who are those landscaping, snow plowing, excavating, construction, and those are expensive, right?
Yes, they are.
And what kind of things, can the client be doing from a safety perspective or prevention perspective to help lower those, right? What are you seeing the carriers trying to help folks with to help lower that?
Right. I mean, loss control with these carriers, a lot of people don't realize, when I say people, the business owners, they get very busy, but there's a lot of information on their websites, which we can direct you to, that tells you these are the things you need to be doing in order to keep losses at a minimum.
And we say losses, we say claims, right?
Sure, yeah.
Right?
Losses like workplace injuries, that type of thing. Training, certain, boots. Steel-toe boots with certain businesses is really important. And they also offer loss control services right at your site, which for some business owners, they just want to be left alone. And there's some that are open to that because they've had a loss in the past, and they really do value the added information from the carrier that comes out and says, that entry mat that you have for where your customers come in, that needs to be replaced, or the curbing needs to be painted, or just, certain things like that a lot of business owners would overlook, and it's an easy fix.
Yeah. Yeah, so that's a great point. I mean,
the resources are there.
Right. If the client wants to take advantage.
If they want to take advantage.
Right. That's the if, right?
That's the if. Yeah.
What are the types of policies? We talked about workers' comp. That covers your employees.
Yeah.
What other types of policies? I know there's BOPs and there's different liabilities and different types of things. What other types of policies might you be looking at for a small business? And certainly, sometimes it's not always just a single policy. It might be multiple, right?
Right. Yeah. No. A lot of people think, because that whole packaging my policies together, or bundle as many call it, they're always interested in that. But they are truly separate policies. They may be with the same carrier.
Let's say so. When Flo says bundle and save.
Yeah.
Right? Is that the real deal?
It is the real deal.
Okay.
But she wants it all with Progressive.
Okay. And you want to make sure it's with the right carrier
each time. We, as your independent agent, we may not always want that. So we may break that up a little bit and put the customer with the carrier that we think is a better fit for the business that you're doing. So other things.
You're getting a little tinny there.
Yeah.
Other
policies that we look at too is a lot of business owners don't realize if they own the vehicle personally, what they've left themselves open to, which is a lawsuit against their personal assets. So
if they're using their personal vehicle for business purposes.
Yeah, or some people have a business vehicle, but they go and they buy it personally, and they've left themselves open to a lawsuit, where we highly recommend a business owner, commercial auto policy in the business's name so that you're kind of pulled out of the picture, if you will. That's a big one because a lot of people say, well, I own my personal truck, and some of them have them on personal auto policies, and business use of a personal vehicle is excluded in the policy.
Exclusions. I hear that word a lot when you talk. Like what does that mean?
Yeah.
What types of things are excluded and how's that work?
Right, sure. So a lot of, I don't think a lot of people probably read their policies.
I don't.
Yeah, and it's as
you send them to me.
I do send them to you, email, not paper.
Right.
So a lot of people don't read them because it's a lot of material, and it's confusing because in some part of the policy it's included, but then when you get 2 pages in, it excludes certain things that were included.
Interesting.
So it can get confusing, and exclusions are exactly that. So there's certain things that are just not going to be covered on your policy.
And I know this is probably a loaded question, but what's a normal exclusion for a business policy? What's something you see that's a pitfall, right? This is almost always excluded, but it's always something you have to think about, something like maybe cyber or those types of things, right?
So one that I would like to bring up now that seems to be showing its face more and more is flood. So a lot of people don't realize, and some do, that flood is specifically excluded on your business owner policy or your homeowner's policy. So that doesn't mean that if water comes into your basement through your sump pump, that's going to possibly have some coverage through the sump pump and sewer backup endorsement. But if the water hits the ground first and comes into the home, and you don't have a sump pump, and it's actually a true flood, that's going to be a major exclusion, which I think a lot of people have experienced, and you have to have a separate flood policy for
So we
that.
see across the country, certainly hurricanes and changing weather patterns and
Right.
ocean rise, sea rise. We're in southern Maine.
Yeah.
We just had a big storm a couple weeks ago. Lots of folks flooded who have never flooded before, right? I'm sure your
Right.
phone's been ringing off the hook.
Yes, it's been very busy.
And you had to be the bad guy in some of those situations and say, whoops.
We did.
Sorry.
We did. And then some people bought the flood building coverage, but if you wanted to cover your contents in the event of a flood, which some people, I think they underestimate value of contents. And what happens is if they've just specifically bought the building coverage, then I have to tell them which I just had to tell a local customer, that you have coverage for the building, but the contents that
But the couch that's in the basement, sorry.
Yeah, the items that were on the shelf that ended up floating because the water came up 2 feet, they're self-insuring that. So
Interesting.
Yeah.
Interesting.
Yeah.
Lots of nuance to insurance.
Yeah, there is. There really is. We try to make it simple, but in the end, when the claim hits, it's not so simple. It really boils down to the policy verbiage and how it's written.
And we always hear from folks that say, hey, my insurance company doesn't want to pay, right?
Right.
They're not good at paying when there's a claim, right?
Right.
Do you work with, I guess, are there companies that are better at paying claims or more willing to do those kind of things than others? I feel like there's companies that are notorious for just saying, nope,
Sure.
not my circus, not my monkeys, try again somewhere else, right?
Yeah.
Thanks for your premium, but we're not going to pay out.
Yeah, so it really, and that's what's changed in insurance. I think policies years typically, and they're still available today, can be very broad in coverage. But we've all seen this commercial, only buy what you need.
Sure.
And with that, we feel that's the added value that we bring, because what person is going to just go online and say, okay, give me the A to Z. I want to pay more for my insurance. No, they're going to peel off certain things, or maybe they're not even going to include it because they didn't even know it was available. Right. So what we find is price, we get it. It's important, but you got to be careful of prices that get too low, because you may not have the cyber piece. And if you're the type of business that holds personal information or business information, like a business like yourself, you're not going to have that coverage if, in fact, a data breach occurs, or personal information or business information is stolen, or a ransomware attack or something like that. So.
Yeah, we're all price conscious in our businesses, and certainly,
Sure.
I'm just as guilty. I give you a hard time every year, right? You come back to me and say, "Oh, guess what's going up again?" Well, yeah. I feel like you're, the Grim Reaper every time you walk into my office. But price is certainly important to all of us in our businesses and controlling costs and managing that, particularly for something that doesn't necessarily make us any money, right?
Sure.
I mean, insurance doesn't increase my sales one penny, right? So how is pricing being determined by these companies, and what is an independent agent trying to do versus maybe one of these direct or kind of shopping it yourself kind of thing? What's that look like in terms of cost, right? How's it all work, right?
No. So what I think the way I would compare it is if I went online directly, say I went direct to Progressive, and I know Progressive has a great tool that says we'll even tell you what your best price is. That's
a good deal, right?
That's pretty. That's pretty impressive for a company to actually say, "Hey, I'll get you rates from all these other companies too, and you can decide who you should place your coverage with."
Okay.
So it kind of feels like
Do I need to go to Progressive, John? I mean,
no, they're trying to be us, Chris.
Okay.
But so with that, sometimes you get out there and you think you've got the best rate, and you may have the best rate, and you hopefully have the best coverage. But if you're not looking into where the businesses could have its exposures, which is what we do, you could be very disappointed when the claim came through and you wished you'd talked to someone and said, "Geez, I didn't realize that I had that exposure." Pollution coverage. So if I'm a type of company that maybe carries certain flammable materials or gasoline in the trucks and certain things, you want to make sure you got some sort of a pollution coverage in the event you have an accident or you tip your vehicle over next to a river or something like that. So there's a lot of pieces to it.
Do I have coverage for that?
You do not.
Oh boy! All right. Well, I guess we got to figure that one out. Time for us to get together.
We'll talk about your exposure first.
Yeah, that's the right. So it's about exposure and risk, right? I mean, that's what insurance comes down to, right?
Right.
How much risk is in your business, in your equipment, in your employees, and in everything, and what's it going to cost to mitigate that risk, right?
Right. Yeah.
I mean, and certainly some industries are higher risk and more expensive to cover than others, right? I mean, if you're a roofer, I mean, no insurer wants to touch a roofer, right?
Yeah,
How many guys fall off the roof?
It's really tough. And what's in a lot of cases, where do most damages on a building? Well, not most, but a lot of damages on buildings, homes, commercial or personal. It's happening a lot of times through the roof, and so the claim ends up a lot of times going back to the roofer, which is why. And it's hard for them to, I think, fight the claim, and that's why I think the insurance companies are
the rates are going up because they're paying more and more claims. I mean, we have a mutual client who is a landscaper and can't really afford to be doing big commercial plowing anymore, right? Shoveling and plowing because he can't get insurance. Right?
No,
because basically, someone slips and falls at the grocery store and they're saying, "Hey, why didn't you have that shoveled to black pavement every second of every day, or why didn't you put 3,000 pounds of salt down?" Right? I mean,
it's very hard to monitor those situations, and the building owner is now saying, "Well, don't talk to me. Here's the name of the contractor."
Right?
Yeah, and that's another reason why we're seeing some companies exclude, like we were talking about, exclude snow plowing coverage, or they will offer it, but it's at a pretty hefty premium,
which is crazy. I mean, we're in the Northeast and. Who's going to plow, right?
We need it.
It's a necessary evil, unfortunately. We can't all just live in Florida with the alligators and hurricanes, right?
Right, exactly.
Which are different risks and costs, right?
I don't know about those.
So most policies, we talk about insurance policies, different types, all your BOP, your auto, your cyber, whatever. Everything's on a term, right? Usually 1 year-ish. Is that average?
Yeah, typically most policies, and that's what we like you on a 1 year or an annual policy, because that means during the policy period, if something was to occur, a really bad accident or a very large loss, if you were on a 6-month policy, you would be trying to find better coverage after the 6 months. With a year, you've got the whole year before the company can non-renew or increase your premium. So annual policies, as far as I'm concerned, is the best bet.
So hopefully the policy starts in January. You crash your car in February, and they can't drop you until next January. Is that the plan?
Exactly. No, and that is. I had my a family member call me because they're their son had an incident that occurred, and she said, well, shouldn't we drop him from the policy? And I said, yeah, no, we're not going to do that. And I said, you have nothing to worry about until your renewal period, because they can't do a thing on the policy now.
As long as you paid.
Pay your premium, exactly. And that's what's key right now, too, is paying premiums, because insurance companies aren't so excited about reinstating.
So going into that, the renewal process, right? What's
Yeah.
the process for renewal? Okay, my auto policy's been a year, right? I maybe had a claim, maybe didn't have a claim. What's it look like? What do you have to do with the client to get that policy renewed or shopped again?
Yeah, sure. So the most of the policies we deal with and that we hope to deal with are automatic renewal, like yours, for example. So they automatically renew. They they probably pull motor vehicle records. They may pull loss history reports to say, okay, we're going to renew this policy. And I've never come to you and said, Chris, you're going to see a 5% decrease. I usually always say it's going to be 5.
It's going to be a 50% increase. That's usually what I hear.
5 to 10% increase. So we're seeing that happen more and more. But now the percentage of increases is getting bigger.
So when you get, when the company comes back and says, okay, we'll renew XYZ business, but it's 10% more this year than it was last year, client screaming, what can you do about that? I mean, you talked about coverages and people are pulling things out, right?
Sure.
Other than losing coverage, which we probably don't want to do if we're managing our risk appropriately, what else can you do?
So what I think conversation is key. So we look at the risk and we look at prior loss history, because if the client had a $100,000 loss and they're going to be upset over a 5% increase, I mean, the insurance company, it's going to take, as we all know, years for them to recoup that cost. So we have the conversation, but if it seems like the increase is more of a, geez, I think the company wants this business to go away, then we start looking at our other carriers. Maybe they have a better loss history, and maybe they have a better loss control program, so that they have some ideas on how to keep those losses lower for that type of business. So then we would approach them and put it to market and have the conversation, and then talk to the client and say, this is your renewing company and these are your other options that we can provide.
And it's sometimes may not be better options, right?
Yeah, no, and it's
maybe the devil you know might be better than the devil you don't know, right?
Right. So it's not just the bottom line. So it definitely is a factor, and as long as you can get an apples to apples comparison, we can feel good about it as your agent and you as the business owner to move forward together,
right,
and pursue the new carrier.
So what happens if there is a non-renewal, right? So hey, I've been paying, ABC Insurance Company for 20 years for property insurance on my building, and all of a sudden a tree fell on the roof, caused $500,000 worth of damage. I had to rebuild the whole place, blah, 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 blah. Well, now my renewal comes and they say, no, we don't want you, right? Because they paid out that claim, even though I've paid a lot of premium over the years to them.
Sure.
But now they're saying, no, we're out. We don't want you guys anymore.
Yeah.
Where do you go? What do you do with that?
Right. So at that point, if it's a non-renewal, then at that point we go to our standard market. So you have two markets in this industry. You've got a standard market, which would be the best place for you to have your insurance, which would be best coverage, best price. And then you've got a surplus lines market, which would be not as good a coverage and not very good price. So we always want to hit our standard markets first. So at that point, we would say this piece of business is being non-renewed. We want to be upfront with the new carrier. This is their loss history, and they take a look at it and they say, yeah, we'll still quote that. Or what I'm seeing now lately, because of what we've seen for losses over the last few years or so, is if it's really hard to place business with multiple losses in the last 3 to 5 years and large claims. They want to see a clean 3 to 5 years of no losses before the standard market wants to write it. And in that case, we have to go to the surplus.
Well, so in that case, you're probably going to find something. You're going to make a change in your business, right? That's could be what it is.
Yeah, and they ask that. So if it's a loss that the insurance company feels there could have been certain measures taken, they're going to say, well, what did they do? What are they doing different within the business to make sure that this potentially doesn't happen again?
Right.
So
Crazy. Insurance is it's crazy.
it is.
So we talk about renewal. We talk about the end of the year. One of the things that we always hear is that year-end audit.
Sure.
Which everyone always gets nervous when you hear that word audit, right? What kind of audits are there? How does that work? What does that mean? Why do you have to do them?
Yeah. So as a business owner, and a lot of business owners tend to get a little irritated by this, is I paid a premium, I told you my sales or my payroll was going to be X, and it ended up being less or a little bit more. So in some cases, a lot more. And that's where those audits become painful, because they can add a pretty hefty bill. So from a workers' comp standpoint, as you know, with payroll, we estimate on what the annual payroll is. And the nice thing is, if you're doing a pay-as-you-go type of option where you're only paying for your workers' comp as your payroll increases and decreases, then we're going to be pretty close at the end of the year. But if you don't take that option and you just pay, and you don't call your agent 3 to 6 months in and say, I just hired 2 more people that I happen to pay $150,000 a piece, then your workers' comp audit is going to reflect a fairly large increase.
Because in the workers' comp world, it's based on payroll.
Based on the payroll.
Right? So if your payroll goes up, your workers' comp's going up automatically.
Yeah, and your general liability policy is, in some cases, is based on sales. So if your sales, you estimated at $1 million and you had a great year and it's $2 million, your general liability policy is, you're going to see an audit on that as well. Not all of them are audited. Smaller businesses, a lot of cases not. Larger businesses.
And that audit basically says you need to provide me with your payroll records in workers' comp perspective from this period to this period, right?
Correct.
And they go through and they say, okay, if you had, in some cases, you might have multiple class codes, right? If you have people mowing lawns and plowing snow, those are two different risk categories, 2 different class codes.
Yeah.
And okay, when was Joey mowing lawns in January? Probably not, right? Probably needs to be classified. All those wages need to be snow plowing, which is more expensive, right?
Sure.
And those types of things. So and that audit, then they're going to go back and just kind of reconcile, right? They're going to say, hey, okay, this is what you told us, and this is what actually happened.
Right.
So one of the things that we see a lot of our clients, and I know you push for this, is kind of workers' comp pay-as-you-go model, right?
Sure.
So explain a little bit about that.
Yeah, so the pay-as-you-go model came about fairly recently. It's just a great option for a lot of my clients, because some of my clients, they're out on the road a lot, whether they're contractors and different businesses where they're not just sitting behind a computer. They're not keeping track of this stuff. So when they are able to come to a company like yourself and report payroll, and the payroll company actually pays the workers' comp company based on what payroll was submitted, it's just a very seamless, easy process for the business owners, because they don't have to worry about it. And then at the end of the year, the audit, there still could potentially be a small audit, but it is very small, and we don't get that tough phone call of, what is this $10,000 bill? Do I have to pay this?
Right.
And they really struggle with, why should I have to pay this? I said, well, we estimated X, result was Y.
Right.
So it's not a fun conversation, but I feel like the more of these that we do, pay as you go, and have a payroll company like yourself taking care of it, I don't get those calls at the end of the year.
It's got much more smooth with the workers' comp anyway.
Yeah.
Which is nice. We see that. I mean, we do workers' comp stuff. We aid you in the workers' comp by doing the reporting and so forth. But,
sure.
We've seen the clients that have had those $10,000 bills come through switch to pay as you go. It's a lot better result for them, because they're only paying the premium each week every time they put on payroll. They don't have to come up with a big check at the beginning of the year or every quarter or whatever.
Right.
They're paying it every week, which helps with cash flow too, which is really
it's a great model. I push for it.
Yeah. One of the things that we've had mutual clients that have benefited from this is business interruption and income protection.
Yeah.
Hey, you have a fire, but guess what? You still have 20 employees, right? What do those kind of policies cover, and how does that work?
Yeah, so typically on a business, what they call a BOP, which is a business owner policy, which a lot of small and medium businesses would be eligible for, the business income coverage is going to be included in that policy. And what that does is, if you do have a loss, let's say you're a restaurant, it's a partial fire loss in the kitchen. So it's going to take 2 or 3 months potentially to get the materials, as we all know. Supplies are tough to to get a hold of now and equipment. So you're going to need time to get that back in place, and the business income coverage is going to help you pay bills because the bills aren't going to stop, right?
Sure.
They're going to keep coming.
Guess what? The electric bill's not going away.
And your employees aren't going to say, don't worry about paying me for a few months. Right. So that business income coverage is going to help you.
And basically the insurance company will reimburse you for the normal customary expenses that you were incurring previously, right?
Yes.
And to help you kind of manage through this, tough time.
As you can imagine, it's not an open checkbook kind of thing.
No, and it's a pain in the butt to get those checks.
And you have to prove it.
Yeah, you got to prove it, right?
Yeah, you do.
Well, good. Well, we've covered a lot of ground today, John. I think insurance is bigger than a bread box.
I agree.
And I'm grateful that I have someone like you on my side to help with that. And I certainly would encourage all small business owners to have an insurance agent. I'm grateful to have an insurance agent like you on my side. And I think all small business owners really should have someone like you on their sides looking out for them, right? Managing our risks, keeping an eye on things. But we have to play an active role in that too, right? I mean, you and I push for you every year to sit down and say, let's go through everything, right?
Yeah.
My business is changing and evolving and growing and contracting, and what new equipment did I buy, and those types of things, particularly in the equipment rich industries like landscaping, right? How many these guys are buying tractors and trucks and tools and supplies, and every year they're buying and selling these things. I think it's important for the client, the business owner, to be engaged in the insurance process too, right? You can't just rely on you to know everything we do in our businesses.
Correct, and it just helps strengthen the whole the relationship and your peace of mind as a business owner. I think you want to go to sleep knowing that, wow, I talked to my agent, I removed the stuff I don't own anymore. I certainly don't want to charge you for stuff you don't own. And I certainly want to charge you for stuff that you do own that you want to protect.
Right.
So it's nice to get on the same page and then start your year on a new ground.
It's a lot. It's a boring topic. It's an expensive topic for us as small business owners, but it's necessary, right?
It is.
I think that's the hard thing. Well, good. Well, thank you so much, John. So if you've given us a lot of great information. If people want to get in touch with you, you have Instagram. You're on Instagram.
I am.
What's your handle?
John Boy.
John Boy covers me.
Yes.
Come on.
I'll have to work on that a little more.
At John Boy covers me. Jonathan Johnson, Kasprzak Insurance. Certainly reach out anytime if you have questions. Thank you so much for joining us, Small Business Big World, this week. We'll be back next week. Don't forget to like us on Instagram, Facebook, TikTok, everywhere. You're scrolling in the evening. Find us, Small Business Big World. Be sure to subscribe on your favorite podcast app. And give us any feedback, comments that you might have. So thank you so much. We'll be back next week. Thanks for listening to this week's episode of Small Business Big World. This podcast is a production of Paper Trails. We are a payroll and HR company based in Kennebunk, Maine, and we serve small and mid-sized businesses across New England and the country. If you found this podcast helpful, don't forget to follow us at Paper Trails Payroll across all social media platforms, and check us out at papertrails.com for more information. As a reminder, the views, opinions, and thoughts expressed by the hosts and guests alone. The material presented in this podcast is for general information purposes only and should not be considered legal or financial advice. By inviting this guest to our podcast, Paper Trails does not imply endorsement of or opposition to any specific individual, organization, product, or service.